What's up, Trader's Edge? It's Mark Sebastian, your only option, with a quick update on what's been happening this week. It has been bananas. But before that, I want to tell you about what we're doing tomorrow. We're doing a special class on zero DTE options. It's going to be the best 90 minutes you can spend, because even if you don't intend to trade zero DTE options, they are having a cataclysmic effect on all option trading and really all trading in the stock market as a whole. They were very important in what happened in the price action on Wednesday and Thursday, and I'll tell you a little bit about that in a second. But click the link in this chat to join me, because this is going to be a big deal. So today we're going to talk about real quickly just about the markets and what we're seeing there, and I'm going to update you on the VIX and what's happening with that. And then tomorrow I'll be back with kind of what happened with the rest of the week. So this is going to be a quick one, but it's important. So let's start with what's happening in SPX, because yesterday was absolutely bananas. This sell-off was massive. It actually was bigger than what happened on Fed Day on the 13th. It was just a huge sell-off, almost 1.5%. And I want to tell you why we bounced off that level in SPX. So the level we bounced off of was 47.7801. All right, 47.7801. Well, let's go back to our highs here when we were in August of, we're going to go back all the way to the highs of 2022. And I want to point out our high close, 47.93. That was the high close from January of 2022. So people want to say that, what happened yesterday was, some sort of crazy zero TTE. No, it was a technical sell. It was a technical sell. We got to the highs of kind of our old highs, tapped them, almost tapped them, and then bounced right back down. So we're talking about a technical sell where people said, oh, we're right at a new all-time high, we're going to sell. Now, this is where zero DTE came in. We got this big sell-off. Real quick, algos sent us down 20, 30 points like that. That's where the zero DTE kicks in. And if you look at options on the S&P, for instance, today, look at all the trading that happened in the 47.20s, the 25s, the 30s, the 35s. Now, we closed 47.46. Look at the action on the 47.75 calls, 74,000, 83,000 the 47.40 calls, 76,000 the 47.50s. All of this action, all right, is what pushed us higher. In this case, we had sellers of puts, not huge, few thousand. But when liquidity dries up, and when we get a big push in a few seconds, where we drop 20, 30 points in a minute, liquidity widens up and things become less liquid. It becomes a lot more difficult to trade. So on those zero DTE, as traders step in and try to cover their own butts, the market makers who are selling these options out are selling futures to hedge their position, or going in and trading something against this that also sends the market lower, and it builds on itself a little bit. So without zero DTE, I still think on Wednesday, the market would have been down more than 1%. But I think we got a good 20 to 40 basis point additional movement out of zero DTE options. Think of it as a mini look at what a gamma bomb can look like. Today, very similar action. We got an extra 7, 8 points out of the market. This is Thursday. On Thursday, we got an extra 7, 8 points out of the market because of all the trading on the 47.40 strike. So 0DTE is moving markets in a way you're not even seeing. So SPX, I think we're heading back to this high we're going to retest. Now, where is their opportunity? It's still an MDY, which was extremely strong on Thursday. Look, I mean, MDY is within a stone's throw of its high close from the 19th. IWM still looking incredibly strong and still has way more upside. It's another one that's a stone's throw away from its high close from Wednesday, and again, I think has huge upside. We also saw equal weight outperform standard S&P options, standard S&P 500 on Thursday. All right, now lastly, and then I'll close up. VIX futures got really bid up on Wednesday. They pulled back on Thursday. The VIX closed 1365. We're trading 1544 in the futures, so about 1.8. That's a normal spread. So markets are now not really expecting unexpected fireworks, right? The futures were way out in front of the cash index leading into the sell-off on Wednesday. That relationship has normalized, meaning they're not expecting any more shocks. Markets were kind of looking for that move on Wednesday, and it happened. All right, folks, I'll be back tomorrow with my week wrap up and and I'll talk a little bit about our trading. But I wanted to give you an update on what's happening with markets, why we've behaved the way we've behaved the last 2 days, and why you need to join my 0DTE class with me and Leisha Leslie tomorrow. That's Friday, and it's just $47. It costs nothing. It's going to be the best 90 plus minutes that you're going to spend on your trading for the rest of the year. All right, folks. I hope you have a great day and a great evening. I'm Mark Sebastian, your only option.